Hello guys, happy new month. How's it going? I hope you're all good. Yeah, so I want to do a quick video. I hope I can do it real quick. Yeah, so basically I want to help you as you're entering a new week, starting a new week. We all have the same goal to make money. Is that okay? Our simple goal is to buy or sell when we have an edge in the market. Okay, and this could be crypto, this could be indices, this could be gold, this could be commodities, this could be whatever asset you are trading. Okay, so when you look at my watch list, you can see I have Bitcoin USD, Ethereum, Shiba, ADA, US 30, NAS 100, gold, pounds JPY, euro JPY, and so on and so forth. Okay, so I'm going to do the analysis on pounds Japanese yen. And as you can see, I'm on the 30 minutes time frame. I prefer the 30 minutes time frame because it's more like the middle chart, looking at the 4 hours and the 5 minutes. Like 30 minutes is more like the middle chart. Okay, and I don't like to go up and down when I'm doing my analysis. I don't like to go up, come down, trying to make it complicated and plentiful and all that. I try to keep it simple. And what I'm interested in is anytime on my chart, I want to see prior to the time I'm doing the analysis, I want to have 72 hours of information or 3 days of data. Is that okay? So you can see on the chart we have what the blue lines, the blue dotted lines. That's the period separator. You can see it here, period separator, blue dotted lines, and it represents 24 hours of information. You get it? So that is what I look at first. That's first things first. Okay, and now with this raw charts, like trading is simply an art. So you are the artist. At the end of the day, what do you see? What can you draw from this chart? What bias can you have, or what bias can you go with? Okay, so yes, so now let's just get into it. And I'm going to use some indicators to kind of make it easier for all of us in computing and automating stuff. Okay, so first off, I want to know my support, my resistance, my mid-level. Okay, so I'm going to use the support resistance dynamic V2 by Lonesome D. So okay, so when it comes to indicators, metrics, strategies, and I set for the support, resistance. Yeah, so the first one that has been starred, it has like 8,853 favorites, okay, or added to their chart. So we'll select that. So when we put it on our chart, it's going to draw out our support, our resistance level, and we'll just trace it out. It's like my first copybook. What you do is you have the writings down, and you just will trace it out as though you did it yourself. So yes, we have what you can see. We have red dotted lines, green dotted lines. The red ones are what our resistance lines, and the green ones are our support lines. So the first thing I want to do on my chart is to know my levels. I want to know where my support and my resistance are. Is that okay? Like these levels, price when the price stall around, price got some, rejection, some reaction over there. So that is the first thing I look out for. So now we'll go to our drawing tool, and we'll take our horizontal line, and then we mark these levels. Good. Take another one. Take another horizontal line. Mark our next level. Take another horizontal line. And another one. Marking all these levels. So at the end of the day, when we are done and we take off the indicator, you see that the irrelevant levels would go off our screen. Okay, because we have actually picked a a period you're interested in. That's about 72 hours of information. Good. So this, we have it. We have what? Our support resistance. Now let's take it. We are done. Now this is how our chart is looking like. Is that okay? Now we get to know that, oh, at 163.525, that is a level of resistance. Okay, at 162.155, a level of support. At 159.911, it's also a level of support. Is that okay? And now this is one person, that's Lonesome D, saying that, okay, from my computation, these are the support and resistance level. Then I say, okay, maybe I need another one to confirm that truly these levels are good for support and resistance. So the next one I'm going to be using is still support, resistance. So this the next one will be adding the support resistance V2 by bar stallion. This is by bar stallion. Okay, so that's the one we'll be using. So that is it. When you draw it on your chart, it gives you what? Orange and green lines. And you're trying to use that to confirm the levels. So you can see that our lowest support is kind of similar to the one given to us by Lonesome D. Bar Stallon's support resistance level are corresponding. Is that okay? So now we'll mark out this one, this orange line. Let's mark it. The ones that are very close, we'll just ignore it. But the one that have like some space, we'll just mark it out. And then the other orange at the top. Is that okay? So now it's more like two different support resistance indicators agreeing that, oh, these points are valid for support and resistance, and that's all we need. Okay, so when we are done, we'll just take it off our charts. Okay, so it has helped us what? Draw out our levels. Now we can see that, okay, at 164.241, that's a resistance level. At 163.525, another resistance level. Support level 162.155, and that is it. We didn't have to manually ask, like, where is the support level, where is the resistance level? Is that okay? Right, so that's the first thing. Now I have this, and I'm like, oh, that's good. Like, I have something I'm working with. Okay, now it's like my chart is now coming to life. Now the next thing, after marking my levels, I'm interested in knowing my zones. That's these three zones are the demand zone, the supply zone, and the golden zone. Okay, so to start with, I'm going to draw out the golden zone. The golden zone is more like the middle zone, and with that I'm going to use the Fibonacci. I'm going to use the Fibonacci to draw out this zone. Okay, so let me pull out the Fibonacci tool. Okay, so I bring it to the swing low. Like, this is the lowest level, or this is the lowest point price came to, and this is the highest level price came to on our charts. Okay, so I'm going to pull it from the swing low to the swing high so that we can get the 50% level. That's what we use to draw our golden zone. So from swing low to swing high. Are we good? And now when you do that, you can see down the Fibonacci, we have what? Some values. We have 0, 0.23, 0.38, 0.5, 0.6, 0.7, and 1. So our golden zone is more around the 0.5 level. Is that okay? So we'll pick a little level above the 0.5 and a little level below the 0.5, and that will be our golden zone. That will be our golden level. our mid-level. This is where we are interested in taking our profits if the market gets to this zone. Is that okay? So now to draw out the zone, we'll use what? A rectangle. What we are trying to do is what? Analyze the market. Try to have an edge, like where do we enter a trade, where do we take a buy, where do we take a sell. Are we good? So here, this is the 0.5 level, this mid-level. And I'll say, okay, a little level above it. And then I'll say a little level below it. Good. That is all I need with the Fibonacci. So the job of the Fibonacci is done. So I'm taking it off my chart. Is that okay? Now I have my golden zone. Let me name it. Golden zone. So it's more of a no man's zone. Take your profits in this zone. Yes. When the market comes to this zone, yes, I'm taking my profit. Okay. When I take a buy at the demand zone, I'm aiming for a take profit at the golden zone. When I take a sell at the supply zone, I'm aiming for a take profit at what? The golden zone. Okay. So now, to draw our demand zone, we are going to look at the support area, and we'll be looking at the last red candle or the last bearish candle that showed up before bulls took over the market aggressively, pushed the market up. Okay, and then we'll capture that zone, and that zone will become what? Our demand zone. So on this chart, we see that okay, the support level is around this area, and when we look at it, we can say, oh, this candle, this red candle is the last one. The one with the wick is the last bearish candle before buyers took over the market and pushed the market way up. So we'll capture that red candle. So from the top to the bottom, from the top to the bottom. So we'll take a rectangle. Take a rectangle. Then we capture it. Good. And then we'll color code it. We'll color code it green because we are looking at taking buys in this zone. And then we'll also name it. We'll name it what? Our demand zone. So in our demand zone, what do? We look for buy opportunities in our demand zone. And when the market is not there, you can use what? A limit order. You put a buy limit and say that, hey, when the market gets here, I'm interested in getting activated. Put me in the trade. I might not be on my chart at that time, but put me in the trade. Is that okay? Or you wait for, when market gets to that zone, you wait for an engulfing candle, a bullish engulfing candle as confirmation before getting into a buy trade. Because at the demand zone, we are only interested in looking for buys. And at the supply, we are interested in looking for what? Sell opportunities. Because at the end of the day, the goal is what? You're trying to buy low and you're trying to sell high. So you want to capture these low points based on the data price has given you in the past. Okay, so use the past to speculate what is likely going to happen in the future. Good. So now we can see that what? We are adding meaning. It's like our chart is now having life. We are adding meaning to this chart. It was a raw chart. Now we started by what? Marking out our levels. These levels become what? Our points of interest. It's like, okay, we are waiting for the market to move to these levels. When it moves to those levels, we want to look at the reaction that is going to happen over there. If we are getting engulfing candles, when we are getting rejection candles, then we know that, okay, now it's time for us to react or take trades at those zones. Okay, so now I've done drawing our golden zone using our Fibonacci. We've drawn our demand zone using the last bearish candle before the bullish move up. Now, so to draw the supply zone, then we are going to what? Look at the last bullish candle before bears took over the market aggressively, bringing the market down. Okay, so on this chart, we can see, okay, over here, at the resistance area. This is the last bullish candle before sellers brought the market down aggressively. And so we'll capture this candle, this bullish candle that has what? Wicks. It looks like what? A doji candle or a pin bar. It has wicks extending to the top and to the down. Are we clear? So we'll use a rectangle to capture that, and that will be what? Our supply zone. And in our supply zone, we'll be looking for what? Sell opportunities. So yes, we'll take our rectangle. This candle. Pull it to the top. And then we'll color code it red, because you're looking for sales. Is that okay? And then we'll name the zone. That's our supply zone. So our supply zone, what? We look for sell opportunities. And if the market is not yet there, we put in what? Sell limit. We say that, okay, if the market gets here when we are not on our chart, we want our trade to be activated, because there's an area we are interested in what? Getting involved in the market. Or when it gets there, you can be waiting for what? A bearish engulfing candle as confirmation before what? You take your sell trade. Okay, so it all depends on you. If you don't have so much time on your chart, but based on your analysis, realize that, oh, if price gets to this area, then that is a good area or a good zone for me to get involved in the market. If I'm not there, let a sell limit activate my trade. Is that okay? And now we are good. We started with what? A raw chart, but now we are adding what? Meaning to it. Meaning to it. So after we've drawn this, now we can see, okay, now currently the price are what? 163.232. 163.232. So the market is here. So if the market, when the market opens, right, today when the market opens and the market starts moving up and moving up and moving up and moving up, and it comes into this zone, we have a mark that what? This is our sell zone. So when it comes here, we are interested in getting in a sell, right? And we don't just enter, so we want to see two price action candlestick pattern show up. One is a rejection candle, that is a doji, a pin bar, a hammer. When we see that in this zone, then that is telling us, okay, there's rejection. Sellers are rejecting the market from going further up. And after you've seen that, you need confirmation. So you want to see what? A bearish engulfing. That is a big red candle that engulfs that pin bar or that doji candle that you've seen. Then that is what? Enough confirmation. That is some bias to your side that, okay, I waited for price to come into my zone. And when price came into my zone, price action also told me that, okay, there's rejection ongoing here. And there's engulfing, showing that what? Sellers are interested in getting involved in the market. So now I'm going to also what? Enter the market as well. Is that okay? And then your stop loss will be what? Above the zone. Once you've captured this zone, your stop loss should be what? Above the zone. Don't leave your stop loss vague. It's like, let the market do whatever it wants to do. No. Protect your account. Protect yourself. Put your stop loss in. So, let's say if the market is to play out, then we'll be looking at what? We're looking at going short if the market comes into this zone. And then put our stop loss. So let's say our stop loss will be 164,500, and our take profit will be 162,500, right? Using what? Using a sell limit. So say our stop loss level 164, and our take profit level 162. So that's how our trade is what looking like. Okay. Is that okay? So what's the risk to reward? This is a risk to reward of 1:2.88. Let's say let's make it touch our golden zone, and it can give us a 1:3. Yes. I have a risk to reward of what? 1:3. So whatever you're risking, hopefully the trade plays out, then you're making what? 3 times of that. And this is how you can keep your trade what? Simple. Then let's say, okay, the market is able to move down. The market is able to move down aggressively, move down and come into this zone. Then that is where you're interested in what? Taking a buy. So the same thing, you put your buy limit. So let's look for a long position. Come into this zone. Say, okay, my trade is here. And price is in this zone. And I see what? You see 2 candlestick pattern you want to see. First is what? Rejection candlesticks or reversal candlesticks. These are pin bars. These are candlestick with wicks. These are dojis. These are hammers. When you see that, then that is telling you, okay, sellers were pushing the market down, all right. But at this point, it looks like buyers are trying to resist them from going further down. So when you see that, and then followed by an engulfing candle, so a big green candle follows up, then you get that, okay, now I have confirmation for this buy trade. Like the edge is now in my favor. So I can confidently enter, but still protect myself by putting what? A stop loss in place. So here, and then let's say our stop loss will be 159, 600. Our take profit will be 161, 500. Take profit. And then our stop loss. And then what? That's how our buy trade is also looking like. Let's adjust that this thing. 154, 490. Okay. Our stop loss 154. Oh, yeah, 159. 159. That's now let's give it some breathing room. Okay, so let's make it 450. 460. Okay. This 1:5, but we are more interested in going with like 1:3, 1:3. Or we can manage a 1:5. Okay. Is that okay? So this is how you can trade with what? A buy limit and a sell limit. When price gets to your zone, it's like, hey, put me in. I'm good. Put me in. Is that okay? I have my stop loss and my take profit in place. Put me in. And now we've done this. Okay, now I want to know where our other blocks are. So other blocks are more like points, like the market is more drawn to go to with smart money concept, institutional concepts. It's more like these places hold a bunch of orders that have not been activated or mitigated yet. And so when you're able to spot out these levels, these other block levels, then you can say, okay, based on where the market is, the market can move into an order block to go and activate certain trades, to go and mitigate certain trades. Is that okay? So now, how do I spot my order block on this chart? Given this chart, where can I see an order block? Where can I see an order block? Okay, so we are going to use this indicator. It's called the order block finder. Order block finder. So that's the first one. Order block finder experimental by Wugamlo or Wigimlo. Like it has like 9,500 community likes to the script. Okay, so when we add it to our chat, it shows us what? It shows us where the other blocks are. Bearish order block, bullish order blocks. And then we know that, okay, this is what we are dealing with. Okay. At first, when you add it to your chart, it's going to come to the settings. And the color scheme will be on dark colors. Okay, so you want to change it to bright colors. Bright colors. That is what you'll be using. And so you see where you have the projection. You can see a red, this red line and this green line. So you see those red lines and these green lines. That will be what your other blocks. So you just simply trace it out. Simply trace it out. Use a rectangle to trace it out, and you name it as a other block. So here, take a rectangle. Okay, here. This is my other block. Bearish other block. We capture that zone. Okay. And we color code it gray. And we'll name it. Name it other block. Good. Now I have one at the top. So we'll also capture that one. Yeah. I have a bullish order block here. These are the ones that give us the projection. So those are the ones you are capturing. From this point to this point. And then we name it other block. OB. Is that okay? And so you can see that on Friday, this market moved into the other block, right? And so if the market is able to move into our supply zone, then we expect that, okay, it can come back to this other block or come into our golden zone. Is that okay? So yeah, pretty much this is something I want to share. And then again, looking at market structure, okay, you can see that in our supply zone we have two highs. This is a high point. I'm trying to keep this video at 30 minutes. There's a high point. There's also another high point. But when you compare it, the first one is higher than the second one. Is that okay? There are two highs, but the second one is a lower high compared to that. So when you see the market structure forming lower highs, then it's telling you that, okay, the market is trying to go in what? A downward trend. Or the trend or the market structure is to the downside. So you're waiting to see if this market rises up and it breaks this high. Then it means, okay, the market is switching, it's not going down anymore. Then your buyers should now switch from what? Switch from selling to looking for buys if it's a feasible what? Break of this level. Is that okay? And how do we know it's a feasible break? You have a strong bullish candle breaking and closing above the zone. Then you know that, okay, now this is a strong close. Is that okay? So basically, when you're using structure, you consider the highs. This is a high. This is also a high. But you compare it and the previous one is higher. So the second high becomes what? A lower high. That is also confirming that, okay, the market is moving down. Okay. And then you see that we have lows here. A low was created here. So when this low gets broken, then that is also confirming that what? There's a potential for the market to move down to this other block or to this demand or supply zone. Are we good? So basically, I want you to try and repeat this process on other pairs, on other currencies, on other assets as well. Is that okay? When you do it, it makes a kind of brings meaning, it kind of brings life to your chart or the asset you are looking at. And so you have a bias. You're able to form a bias and say, if the market plays out this way, then I'm going to go long. If the market plays out this way, then I'm going to go short. Is that okay? And one more thing, okay. Uh Sometimes people don't know where to put their stop loss and their take profit. Okay. So there's this indicator by Phoenix binary. It is created by the moving average. The moving average. ATI. That's ATI. And he has a table that kind of gives you your take profit and your stop loss value. So if you're having problems or challenge with where should I put my stop loss, where should I put my take profit, then I'll suggest what you use that as well. Okay. So now let me try and put it on our chart. So come here. The name of the indicator is called RT. Yeah, so you can see the second one, the ATI, the moving average official indicator by Phoenix binary. It has about 7,600 community likes. Is that okay? So select that. I hope it's added to our charts. Okay, now it's a lot. There's a lot going on, but you're not interested in all that. All you're interested in the take profit and the stop loss value. So we'll hide everything. Hide, 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 hide. Yeah, I think we are done hiding everything. So you can see at the top right, right? At the top right, we have what? We have the ATR, the long and the short, and it has the targets. Okay, it has break even, it has stop loss. So anytime you enter a trade, this can help you know that okay, if I'm entering a trade, currently I'm entering a sell, then my stop loss is going to be here, my take profit is going to be here. And it uses what? ATR, average true range. That's one good indicator for what? Helping you set your stop loss and your take profit value. I hope that is good. So if you are struggling, it's like, hey, anytime I enter a trade, I don't know where to put my stop loss, where to put my take profit, then this is going to help you. Okay, so it's just something you should know as well. And then another group of people, it's like, after I've done the analysis, I really don't know when to enter. I really don't know when to enter. So you can also use its harmonics, its auto harmonics pattern. When you draw it on your charts, it gives you like entry point. It's going to tell you that hey, based on the pattern that you are seeing, there's a good place to enter for a sell or a buy, and there's a good place to put your stop loss, and there's a good place to put your take profit one, take profit two, take profit three. These are just things to try out. Is that okay? These are things to try and see if it helps you, if it's going to aid your trading style. And then if it's good for you, keep it. If it's not, like look for the next thing. Are you getting it? So let me see if I can get that. Yeah, so that is the first one, the auto harmonic pattern V2 by He Who Must. It has about 3,192 community likes. Okay, so let's add it on our chart. It will also come with a lot of data. We'll take the table off. We are just interested in the patterns drawn by the auto harmonics. Okay, so you see a table on our chart. We don't need a table. So we'll come to the style and we'll uncheck the table and then we'll click on OK. So with this, when there's a pattern, when there's a certain pattern formed on the chart and it sees that, oh, there's a certain harmonic pattern formed on the chart, it's going to tell you that, hey, this pattern has been formed, and based on this pattern, it's feasible to go for a sell. And when you go for a sell, put your stop loss here, put your take profit here. Is that okay? Let me try and see if it's going to show up on Bitcoin, since it's an active market right now. Okay, good. So we have the auto harmonics giving us a pattern on what Bitcoin USD, the 30 minutes time frame. And so as you can see, it's telling you that, oh, your entry should be here, your entry for a buy should be here, your stop loss should be here, your first take profit target should be here, second take profit, third, or the fourth. Is that okay? When you are swing trading, then you can aim for this. So that is what this one indicator that can help you. So currently the market is here, but saying that, wait, when the market comes to this place, is a good place to enter. That's what 37,700. If the market moves from 38,300 to 37,700, then that is a good opportunity for you to take a buy, because of what the harmonic pattern that has been printed. Okay, so it has shown you what your entry point, it has shown you your stop loss point, and it has shown you your take profit point. And I believe this is going to help most of you, because when people reach out to me, it's like, NS, I don't really know when to enter. I don't know where to put my take profit, where to put my stop loss. Okay, so yes, I'll end it here, and peace out, and have a good one. If you are not in the Telegram community, do well to join. I'll put the link in the description as well. And have a good one. Please do well to practice. Okay, practice, practice, practice. It's practicing that brings what? Perfection. Practicing that brings mastery. Okay, and don't be afraid to trade. And I also recommend you trading with what? Prop firms. It gives you leverage. Okay, when you're trading with a small capital, your goal is to make big money, your goal is to make more money, and so you start over leveraging, you start increasing your lot size, and all of a sudden your account is blown and the cycle repeats over and over again. But you can use that little money to purchase a prop firm and then trade with it. Okay, so basically I trade with Blue FX, and the link will be in the description as well. So guys, that will be it for today. Do well to repeat it. Do well to repeat it. Okay, so have a good week. Peace out.